Imagine investing in an asset that has increased by over 500% in the last 40 years. Yes, we're talking about gold. The shiny precious metal that has been a symbol of wealth and prosperity for centuries has proven itself to be more than just a pretty trinket. Over the past 4 decades, its value has skyrocketed, offering a golden surprise to those savvy enough to invest. Intriguing, isn't it? Let's delve into the factors that contributed to this stellar performance. The journey of gold from the 1980s to the 2000s was nothing short of a roller coaster ride. Take a moment to rewind back to the 1980s. Gold was on a wild streak. In January 1980, it hit an all-time high, driven by geopolitical tensions and inflation fears, but as the decade unfolded, the glimmer of gold started to fade. The U.S. Federal Reserve's aggressive interest rate hikes and the introduction of financial derivatives offered more lucrative investment options. As a result, the price of gold plummeted, and by the end of the decade, it was in a slump. Then came the 1990s, a decade marked by economic prosperity and technological advancements. For gold, this period was a mixed bag. The early years saw prices stagnate, but by the mid-90s, gold was back in the spotlight. Central banks started selling off their gold reserves, causing a dip in prices. But towards the end of the decade, gold staged a comeback. The Asian financial crisis and Russia's default on its debt caused investors to flock back to gold as a safe haven. Now, let's fast forward to the turn of the century. The 2000s brought a new wave of change. The dot-com bubble burst, and the 9/11 attacks shook the world, causing uncertainty in the global economy. In response, investors turned to gold, pushing its price up. But the real game changer came in 2004, when the first gold exchange-traded fund was launched. This made it easier for everyday investors to buy gold, driving demand and prices even higher. By the end of the 2000s, gold was on a winning streak. The global financial crisis of 2008 and subsequent recession saw investors rushing to gold as a safe haven. This demand, coupled with low interest rates and economic stimulus measures, propelled gold to new heights. As we moved into the new millennium, gold was ready for a new chapter in its history. From the 2000s to the present, gold has continued to glitter, with some bumps along the way. As we ushered in the new millennium, gold took us on a roller coaster ride. The early 2000s saw a steady rise in the price of gold, with the dawn of the financial crisis in 2008 acting as a springboard, catapulting the value of gold to unprecedented heights. The crisis had investors scurrying for a safe haven, and what better refuge than the time-tested reliability of gold? This surge in demand drove the price up, peaking in 2011. But the financial world is always in flux, and so too was the price of gold. In came the era of quantitative easing. Central banks around the globe started pumping money into the economy, hoping to stimulate growth. In theory, this should have sent the price of gold skyrocketing, but the reality was a bit more nuanced. The price did rise initially, but as the economy recovered, the allure of gold waned and its price fell. Fast forward to the present day, where geopolitical tensions continue to sway the price of gold. From trade wars to global pandemics, these events create uncertainty, and in the face of uncertainty, investors turn to gold. Despite the ups and downs, gold has proven to be a resilient asset. It has withstood the test of time, weathered storms, and continues to shine brightly in the investment world. It has been quite the adventure, a journey that reflects the resilience of this precious metal in the face of varying economic climates. From the roaring 80s to the transformative 2000s, gold has held its own, showing us that it's more than just a pretty face on a ring or necklace. It's been an asset, a hedge against inflation, a safe haven during turbulent times, and a source of steady returns. It's seen the impact of geopolitical events, market fluctuations, and changes in demand. Yet through it all, it has maintained its luster, its value, and its appeal. Whether it's the gold rush of the past or the digital gold rush of the present, gold continues to be a significant part of our financial landscape. So the next time you think about gold, remember it's not just a shiny object, it's a shining investment opportunity. If you found this content interesting and want to learn more about such investment opportunities, do hit the like button, leave us a comment about your thoughts on gold as an investment, and don't forget to subscribe to our channel. Stay tuned for more.